The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, folks, this is Larry Pesavento for TFNN. If you have any questions, it's 877-927-6648. And I'd like to start the show by recommending those of you that are interested in the markets and stuff to listen to Bud Rolfe's webinar that's coming up. Bud is a real professional in the same vein that Basil is with the experience and everything that he has. So anytime you get someone with that much experience that gives that much of their time, it's certainly worth the effort, and he's giving some really good information. And believe me, this is me talking. This has nothing to do with TFNN or Tom O'Brien. I know Bud Rolfe, and I recommend his work just like I do Basil and also Steve Rhodes. And I don't know Daryl very well. I don't know Daryl at all, but I know by watching him he knows what he's doing. But anyway, it'd be something to look at. There's something happening. I posted a chart for Apple in the chat room just as we started, because we hit the 61% retracement on Apple yesterday from the last high that we made. That came in at 459, and today's chart made a Gartley on the opening, and now it gives us a price objective of around 444 in Apple for the day. Whether that'll happen or not, I don't know, but that's what the projection is. However, what I'd really like to talk about now, and I posted the chart for April cattle in the chat room, and I know this is the commodity hours tomorrow, but I don't think this is going to wait. I really like this. This is a 3-drive pattern. We have multiple ABCDs. This is the exact mirror image of what we had when we made the butterfly top up at the 138 level when the whole world was bullish cattle. Now the whole world is bearish cattle, and it's the same pattern, pretty much doing the same thing. The reason why I'm spending some time with this cattle today is that there is an ETF that's out there that people can trade just like a stock, and it's really a lot easier to get into and everything. So I think that I'm going to post it here in just a second, and you'll see the same similarities, and it is the futures for the livestock, with pretty much cattle and hogs, but it's primarily cattle because they use more cattle than they do hogs. But you'll see the patterns that are there over a long period of time. The top that was made back in 2011 and where we are now. And this is a major bottom, in my opinion. It's trading around 25.60. You don't have to risk more than $1 here. At 24.60, we would be wrong, in my opinion. But the harmonics are there. The patterns are there. Everything is set up for this thing to go higher. I'm not going to spend a lot of time on commodities today because that's for tomorrow. We'll spend more time on this tomorrow. But hogs are also making a 61% retracement from the last low to the high, which is also, another reason why this trade looks like it does have some pretty good potential. It has good volume, and it is tradable. Personally, I've never traded it, but I know people that have. And it does look, very, very interesting from where it is today. It should be very, very close to, a major bottom. These are patterns that have been going on for a long time now, and this is the time we want to be looking to get long the cattle futures, and the cow is one way to do it. I don't usually recommend ETFs, but this is one that's got just about everything going for it that you could possibly ask for. It really has some really good things that make you want to make it believe that it's really, really good. So anyway, that's what I'm looking at, and that's the thing that I'm looking at to do right now. In fact, we were buying cattle on the opening this morning, and that's pretty much what we were looking at. Now there is a caveat here. And I want to bring it to your attention here, because I have to update the chart for just a second here, and that is that the cattle futures. This is I have to hold on one second here. I'm not sure that this date is correct, because this shows that the ETF for the livestock doesn't follow the cattle futures at all, and I have to double check that. So I would hold off buying that COW. I just happened to pull up the weekly chart, and it shows where it shows the 61% retracement on the live hog futures, and it doesn't show the the bottom that we're having in cattle because this is a weekly chart and we're making it this week. But what concerns me is the fact that the ETF for the livestock has not followed anywhere near what the futures have done. So I would hold off on buying that. It's just not have the same pattern at all. It's got lower tops. It hasn't followed the market with any volatility at all. So I'm really happy that I happened to look at the weekly chart on this because this is telling me something totally different. This is one of those things that I mentioned before on the ETFs of some of the other things that we've looked at that have never followed the markets that the way they should. So this is one that I would have to pass on because if it was an ETF for livestock futures, it should have made a higher high in 2011 than it did in 2011 by a long shot, and it never even rallied at all. So it's not a very good thing to. I'm buying. Actually, I bought the June futures today at 121 and change because we're coming into the April contract for futures. Cattle futures will be coming due pretty soon for delivery, and they don't deliver the cattle to you anymore, but it's basically you want to move to the June, and they're trading at a discount to the April cattle. April cattle are trading around 125, and the June are trading around 121 and change, and so you're buying them at a discount. That's because they're expecting less demand in June than what we have now. So that's the why we're looking at this. But I'm very startled about this ETF for the livestock. That really troubles me. That's one of the reasons why I don't like ETFs is because sometimes they don't follow along, and this one certainly is one that has not really done anything near what the rest of the meat complex has done. But I do like the cattle futures themselves. They have looks like they're putting in what I think is a major bottom in here, and that's really what I'm looking at. Now we want to get to what I want to cover right now before we get into the break is I want to talk a little bit about responsibility. When you're trading, and the main thing I wanted to do is to bring up someone who's pretty famous in our business. And her name is Meredith Whitney. I don't know the lady herself, but she's quite famous. And I wanted to show you, she came out with a recommendation that she, on March 18th, 2 days ago, and she said to CNBC that she was as most bullish as she has ever been on equities in her career. Now, the reason why I'm saying about responsibility, she made a call in 2011 about the muni bond market collapsing just at the absolute bottom. I think she was 1 day off of the absolute bottom. The day that she came out of her major sell, the market went down and made a three-drive to a bottom pattern, and then it has rallied for well over 18 months. That's not the important part. The important part to remember here is she's making her opinion made about what she thinks is going to happen. And it's no different than the opinion that I might have or the opinion that Basil might have or the opinion that anybody has. It's just an opinion. You are the one that has to take the responsibility, and that's the real important part of understanding what's going on. It's not the question of whether she's right or wrong. She made her mark in the financial world about 10 years ago when she made a tremendously accurate bearish call on Citicorp that she thought that it was going to drop about 80%, which I think it dropped even more than that. But that's what made her very, very famous. And then she went out on her own and has, her own company now. I believe she worked at Goldman Sachs at the time, but my memory doesn't go back that much because I'm not a follower of stocks very much. So that the important thing is to remember that it's the responsibility that you have to have, when you're doing these things in order to understand, what you really need to be looking at. So, someone asked me a question, how could, something like this happen? And the reason is that she has some, a big following. She's a very famous lady, but it's her opinion. That's basically it. Now, I want to move over to the stock market here before we get into the first break, and I wanted to put the long-term weekly chart of the NASDAQ, of the composite index, and you will see that we're making that three drive to a top pattern that we've been talking about. This is the NASDAQ, yes, and it's a weekly chart, and it just shows that the three drives that we're having on a long-term basis are completing up in this area, just like all the others, the E-mini and and the NASDAQ and the Dow Jones and the whole 9 yards. They're all doing pretty much the same thing. On a shorter term basis, what we're looking at today in the NASDAQ, we've had a very nice symmetrical AB equals CD move that completed at the high of the day. We've sold off a little bit, but that has completed just exactly like it was supposed to come in, and so that should be the high of the day was made earlier in the day. If this pattern is correct, we'll have to wait a little bit longer because it's still real early in the day, and you won't know the answer to that question until the close, or maybe halfway through the day. I'm not sure. But the other one that we need to talk about for just a second here is the gold market, because it's at a very critical level now. It's coming in right now to test the 61% retracement from the low we made the other day, which I think was made 2 days ago. So this is a very important test that we're making in gold, as we're speaking right now. Longer term, I'm very, very bullish on gold, but we could get a correction, well into the 1580 level if it breaks. And the news that comes out of these countries is just, truly amazing, because I just can't believe the rhetoric that I hear. Folks, if you think that if someone come in to take money out of your bank account and just reduced it by 10%, I think you would be upset. And when these banks open in Cyprus tomorrow, or whenever they're going to, they keep postponing the day, and they do something like that, there's going to be a run on the bank. I mean, I don't know how there cannot be. If there isn't, I'll be the most surprised person in the world. But if you told everybody in the United States what happened, and our banks were closed for 3 days, there would be rioting in the streets. So there's going to be something very significant to this. Just because Cyprus is a small country, I believe what the EUC did was to take use this as a test, to see how the rest of the world was going to handle this particular thing. And I don't know if that's what's really going to happen or not, but this is what I'm looking at. I've got to take a little break here. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and I want to talk just a little bit about gold because I had a question, and they asked why I thought it could get down to that 1590, 1585 level, and I posted into Tiger TV the action for the last 3 weeks when we made our big 61% retracement down at the 1560 level. You'll notice that there are a perfect AB equals CD pattern in gold that stopped exactly, at the high at 1614, and the 61% retracement coming off of the last C point, which occurred on the 14th. That was on Monday. On Friday. That would bring you down to around the 1590 level, and I would be a buyer of gold at that 1590 level because you have higher bottoms coming in and you're in that rising channel. So I still think it looks okay. Silver is still lagging badly again and holding up okay, but still lagging badly. And we'll see if it's going to hold the level. But we still have a chance at that for the gold to get down to that 1590. The fact that gold did not really explode out of here during the crisis, that really started on Sunday night. Gold only moved a total of $40 an ounce, and that is really not very much when you're considering it was trading at 15.76 and only go $40 during a financial crisis. These are the things that the gold bugs just absolutely go crazy for. So this is why I think we could still get a pullback down to the 1590 level, and that would be a much lower risk. Your stop there would have to be below 1578, but still it's a better place to buy it than in this area where we are currently. So that's what I'm looking at in the gold market. long term, it still looks really good. As long as that 1560 holds up, gold looks really good. It looks golden, as you might say. Tomorrow's show, I'm going to be talking in the commodities. I really have spent a great deal of time looking at a lot of commodities, and it just amazes me as what some of these have done. And I think that it's going to be it should be a really good show tomorrow. Hopefully it'll be a good show for the rest of the day too. But that's what I'm looking at in the gold market at the same time to buy it around the 1590 level. Now the second part of the show here will start in a little bit, but what I'm going to be talking about during the second part of the show is the currency markets, because we have been watching these patterns occur in the U.S. dollar index, and I wanted to be able to show these patterns because they work very, very well. They don't work all the time, like nothing does, but it really gives you a good chance of trading things. And these markets are moving so rapidly overnight that it really is a wonderful vehicle for trading in foreign exchange. And of course, the thing that Tom's always talked about was the King dollar when it was down around 75. That's been a huge move for well over 15 or 16 months. And we have completed that big Gartley pattern up at this 83.07 level. We retested the high from Friday, but it looks to me that this 786 in the market will probably hold, and the dollar will weaken here a little bit. You have to remember now that the dollar didn't really soar when it really should have. When there was supposedly a mini crisis in Cyprus, nothing really happened. I mean, there was some volatility in the stock market, 150 points down and then back up to where it was before. And so nothing really, really dramatic happened at all. We had a pretty good move in bonds. They've, moved up and made an exact 786, which we'll post here into Tiger TV when we come in, to the next segment. In fact, I think I can just put that in here now, and you'll be able to see it, because I've been following the bonds, most of the evening, and this has been a time where my alerts go off in the middle of the night, and they have give you a pretty good idea when some things are happening, because London Open is such an important part. But if you'll take a look when you get a chance to go into Tiger TV, you'll see that the Treasury bond stopped exactly at the 786 retracement of the high we made back on March the 3rd. And we made actually a double top there yesterday in the middle of the night. And now we've come down and tested the 61% retracement at this 143 level. And I really don't know if it's going to hold this level or not, because I think most of the news is out. But tomorrow will be very important when they open these banks, and we'll see what happens, with the people in Cyprus, just to see how much heck they're going to raise, and that's what the bottom line will probably show. Got to take a little break here. When we come back, we're going to cover some more currencies, and we're going to cover them in depth. 877-967-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, folks, we're back, and we want to take a look at the euro. What's happened over the last few days, starting with Sunday night. We had the big sell-off, and that that was the big move down. And since that time, we've went up and down. Today, what we've done is we've completed a 786 retracement of the rally high that came in at that 130 level in the S&P, in the euro. Now, if we exceed the 130 level in the euro, this would, to me, confirm that we've made a very, very significant bottom, and that would also reconfirm what we're looking at in the U.S. dollar index. The reason why we're watching this number so closely is because on the daily chart for the euro, the 786 came in at the 129.88 level. 128.88 level, and we're trading above that now, so it's reaffirmed that. And remember, we've been in a very, very bearish downtrend in the euro for well over 3 weeks now. Well, actually, it's been more than 3 weeks in the euro, so it is due to have a bounce, and the fact that the world didn't come to an end when this Cyprus thing was brought out. That means quite a bit. By the way, just for general information, I happened to be watching Charlie Rose last night, and it was really amazing because he had a really great guest on. He had Ace Greenberg on from AIG, and he's written a book called The AIG Story, and it basically tells how the government, J.P. Morgan and Goldman Sachs stole pretty much, the assets of AIG. And of course, he's suing the U.S. government, which I don't think he'll have much luck at. But he was very interesting to watch. He was 87 years old, and he's sharp as a tack. And it was really a very good show. I'm going to have to get the book. It's called The AIG Story. And my wife worked for AIG, so it's a little closer to home than I would like to admit. But that's the way that it looks. Now, the next currency that I want to take a look at that is really important that we've been watching all along, and on a global basis, it's equals to what the dollar has been doing. And that is the Japanese yen versus the U.S. dollar. That also have made a 61% retracement 2 days ago, and today we hit the 786 retracement of that. And so these currencies are at real critical levels. There's no question about it in my mind here, because if they get any strength at all from here, that tells us that we're going to be in a short covering rally for a while. And that's what it is. It's a short covering rally. The euro still looks very, very bearish on a long-term weekly chart, as does the pound. And the Japanese yen, of course, on the long-term weekly, we've featured that several times on the show here, and I'll bring that chart just to show you that level that we hit in the euro at that night. The dollar yen on the weekly basis was really coming in around that 96 level. We broke down to 93 and change, and now we're making a retest on the 61% retracement of that level. So that's what we're. Those are two of the main currencies that I follow, and in the world markets, there are two of the largest that you can actually work against or trade against. These markets are so really interesting on a trading basis that it's really terrific. Last night the British pound had huge moves, and by huge I mean $700-800 in one direction, and in a matter of an hour they would go back and make a new high. These are really big moves that are occurring, and you can see if you go into the Tiger TV, you'll see that big ABCD that finished on the pound versus the dollar, and that's exactly the same pattern that happened in the NASDAQ when the NASDAQ made its high. I posted that one in earlier. It's that same, AB equals CD pattern. Someone asked, about my view on copper. I'm still very bearish on copper. We're in a nice little rally because it's been down for so much. The target that I was looking for was within about 2 cents of today's low, 2 or 3 cents, I believe, of today's low. But I'll cover that tomorrow. As a matter of fact, I should cover a little bit of it now. But folks, it's really hard for this stock market to become bullish here, in my opinion, because of the situation in the industrial commodities like platinum, silver, which is basically industrial, and platinum, palladium, copper. I mean, all of these are just really getting hammered very, very bad. And if the economy was that good, that people would be stockpiling this stuff, getting ready to make products, and that's not what's happening. So there's something not right in this rally that we're having in stocks. And remember, the stock market is a market for stocks. It's not a stock market. Each one of them is separate. They're looked at separately. But as those indexes, they put them all together, and that's where you get your index trading, and why it gets pretty volatile at times, because it doesn't take but one or two of those stocks, especially in the Dow Jones Industrial Average, to move something quite a bit. So it's very easy to move the Dow Jones. It's not very difficult when you have 30 stocks that are price weighted. There's no question about that, in my mind at all, as far as what I'm watching, when I'm looking at the overall market for that. So that's the main thing. And then I wanted to switch over now because something happened today that I think is important. I meant to do this when I was doing the S&P futures, the E-mini, but the break came at the wrong time, and I wasn't ready to switch the charts. But the importance of the low that we made on the Cyprus low, and that was the 19th, March 19th, is very important, because that was a 382 retracement of the low that we made back on February 26th, which was a very important low. That's when the market, really blasted off. And as long as that 382 level holds, that's a very, very positive thing for the stock market. Now, today's high was an exact 61% retracement of the high we made 3 days ago. And, the NASDAQ went to the 786, the Dow went to the 786, and the S&P has gone to the 618. Whether that'll hold or not, I don't know, but these are the numbers that I'm looking at. The key number today in the S&P would be the 1556 level. If we close above that, that would tell us that we're probably going to make another high coming in on Friday. But the market has to really explode out of here for me to call uncle, because of the strong, long-term charts and the divergences that I'm seeing. It's really, really hard for me to become, bullish here. I know people like Meredith Whitney can make a call like that, but frankly, looking at the charts, I don't see that. I don't see that occurring. Yeah, that doesn't mean that it can occur, but I certainly don't see it in any of the patterns that I'm looking at. These are completing patterns. They're not beginning patterns in everything. Someone asked the question to me the other day about how does this market relate to the market that we had in 1999, and there's no comparison at all. In 1999, we were in a parabolic move, a once-in-a-lifetime move, where everything went crazy. I don't know if you folks remember the ads that were on with these little kids that were day trading, just teenagers that were having their own helicopters and yachts, and it was just really hilarious, some of the ads that they had for the day traders and stuff that was going on. And that was a time when, I will never see it in my lifetime again, but I'm sure some of you people that are in your 20s or 30s might see it again sometime. But it's really, a very, very unusual time when that top was made. Stocks would jump 20, 30, 40% in a day, and many stocks that were trading well over 200 or 300 went to bankruptcy. CMGI, and there's so many of them that I can remember, Sycamore Networks, and some of these stocks that were just absolutely, crazy, what they were doing. And so that was a different type of market that we have now. The market that we have now is very orderly. It's had very beautiful patterns coming into, what it's doing right now. They're doing the exact opposite of what we were doing in 2009. The news is the exact opposite of what is in 2009. So, these are things that I think that are you have to pay attention to. This is a very important time that we're in, folks, and I don't want to scare anybody, but by the same token, if I'm wrong, you're going to be able to get back in the market on some type of a pullback. But when you have a big run like we've had here, it's very unusual for the market to put in a new leg after a big run like this. This is not like 2000 and 1999 and 2000. It is not like that at all. The volume is way down for one reason, but that's just the way the market moves at that particular time. So I don't want to be an alarmist, but just be careful up in here, because we are at some real important levels that I think you need to pay very, very close attention to, just from a common sense point of view. There's a lot of I don't follow the fundamentals. A question was given to me about what's happening with Hewlett-Packard. Who knows? I don't know, and nobody else does either. Okay, we got a call from Robert in Columbia, South Carolina. Are you there, Robert?
Yes, I am, Larry. Nice to talk to you.
Nice to talk to you, sir. What can I do for you?
Well, I was looking ahead at the Astro side of the coin, and it looks like a week from tomorrow looks like a pretty big day. Have the Sun and Venus and Uranus all at 8 degrees in a cardinal sign. Now, I know you focused on Venus and Uranus before. I just don't recall exactly what.
Well, I don't do work with the cardinal signs. I basically just look at the days and the number of days that I'm looking at it. That's
right.
Really what I'm looking at, and I watch how these aspects hit, because I know the probabilities are high that something might occur, but it's just a probability, and that's the same thing that it does with lunar cycles. The cycle you're talking about is a much bigger cycle, because you're talking about planets like Mercury and Venus, and the sun, whereas with the lunar cycle, the moon is not really a planet. It's just a satellite, even though it controls the gravity on our Earth. That's how they figure the tides and everything. But these other ones are quite big, and you're right. We're over some really big astrological events starting Friday, and they go well into early April. They happen at various days, but there's a lot of aspects that are occurring at that time. So that's all I really can tell you for sure.
Oh yes, I just saw they were all almost precisely at the same degree. All three of those planets, Sun, Venus, and Uranus. So, but yeah, I see a few others that are popping off this weekend. So, just a busy period. So hopefully we'll get some action we can make some money with.
Well, I'll tell you, Robert, I don't think it's ever been easier than in the Forex markets, looking at the shorter-term charts. I mean, they've had such incredible moves these last few days. My alerts have gone off in the middle of the night more than they have in a long time, and it's really amazing, some of the swings that we've had, it's really quite amazing. One of our guests that I had on here a few months ago, Bill Foster, he's predicting something really sinister to happen in the next 5 or 6 days, starting with earthquakes off the coast of South America. So if you hear any news about the earthquakes on the South America, let me know, because I'll be watching that myself, because he's saying that's going to be the trigger for some real serious things. And whether that occurs or not, I don't know. I just follow the charts. Well, the problem that we have here, Robert, and this is what I think the market's telling us to get ready for, is the fact that these markets move. Any market that can take 150 Dow points away from you and give it back and take it away again, it can do anything it wants, and so it can have huge gaps. One like we had on Christmas Eve, New Year's Eve. If you remember, the market gapped 25 or 30 points on the S&P that next day. So there's not unusual for having big gaps like that during times like this. So you've got to be very, very careful.
All right. Well, thank you, Larry. You have
I didn't talk too much. Do you have any other questions?
Oh no. I appreciate that, and I'll be listening to you tomorrow as well. Thanks so much.
Thanks a lot. Well, I do talk a little too much sometimes, but once my mind gets working, I try to cover the things that I think are important. Remember that the astrology that I work with is based on probabilities. I mean, I don't have the Holy Grail, but nobody else does either. All we're trying to do is to place some things together that look, really interesting. Sometimes they work, sometimes they don't work, but the primary things that I look at are the ratios, and then I look at the patterns, and then I look at the timing aspects, of using the astrology. But frankly, since the last, I believe it was the new moon was around New Year's Eve, I believe. That after that one, they haven't been working very well. I mean, they might stop for a day or two, but there's not been any really good cycles in the moon that I can see. We got to take a little break here. 877-927-6648.
TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, I'm going to wrap up the show, but I posted a chart into Tiger TV that shows the S&P Cash Weekly going back to 2007, and you can see that we're touching that high that we made in 2007. We're making it, just a beautiful 3-drive pattern up there on the weekly chart. But the importance of this chart, I think, is even more significant, because what I've done is I put the yield of the 30-year bond. In other words, how the yield has been dropping, from 5.5% back in 2007 to the yield is about 3% right now, and that's a huge move, and that's why. If you'll notice that time in 2011 when the QE2s, QE1 and QE2 really start to come into play, when the Fed put down interest rates, that's it. Now this is where I think our biggest problem lies, is the fact that the Fed has done something that is economically not correct. You don't cure debt by giving more debt, and that's exactly what we've done. Our country is so deep in debt now that I don't see very much way of getting out of it. Maybe on a long-term basis there's a way, but they'll have to devalue the currency most probably in order to do that. So we'll see if that is going to happen or not. But the yield spread between what stocks are doing and what bonds are doing is as wide as it has ever been historically, and we know about this long-term bearish butterfly pattern that we have on the 32-year bond. On the 30-year bond, going back 32 years is extremely important. So we will be looking at a place to get short these bonds. Again, I don't know if that high at the 786 at the 144 level is going to hold or not, but we'll have to, just to wait and see. I really want to see how the market responds to the next financial thing that they're going to throw at us. Because believe me, this like we were in 2008. It was Lehman, it was Bear Stearns was first, and then there was Lehman Brothers after that. And as like Gase Greenberg said last night, he said there was no way in heck that they should have let Lehman Brothers go down. The only reason they let it go down is because they were the number one competitors to Goldman Sachs, and Henry Paulson, Hank Paulson, Secretary of the Treasury, was the CEO before at Goldman Sachs, and that's why they let it go. It was another a blatant robbery of how some of these banks have worked, and unfortunately, it's not getting any better. I noticed today that they're loosening the Dodd-Frank rules already. They're already doing a remake of this bill that was supposed to, tie these banks' hands a little bit, but it really didn't. There's a great book someone just mentioned. It was called The Inside Job. It's a great book if you get, or a great video if you get it. It's really terrific by Matt Damon. That's it, folks. Live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.